Welcome, everyone, and good afternoon. We appreciate you so much for taking the time to join Crestwood and Avalara today for our joint webinar. John, if you could proceed to the next slide. Before we continue, I wanted to go over a few housekeeping items. Upon joining, you'll notice that you are all muted. So for any questions, please utilize the Q&A section within the chat. We will be reviewing all inquiries, and rest assured, we'll address them at the end of the webinar. Next slide, please. With that out of the way, I'd like to formally introduce myself for those who might not know me. My name is Nicholas Cabrera, Customer Success Manager focused on Microsoft products here at Crestwood. We specialize in providing technical expertise, consulting, and professional counsel for Acumatica ERP, as well as for the full host of Microsoft ERP and licensing services, such as Dynamics GP and Dynamics 365 Business Central. We're also a gold partner with Microsoft, with a team well versed in providing ERP solutions while understanding all of our clients' pain points for improvement. Within this webinar, our goal is to showcase the benefits of working with a partner like Crestwood that can accurately understand your needs, and how to counsel from an additional partner like Avalara can be meaningful with their tax information and facts in an ever-changing landscape. Next slide, please. Our values here at Crestwood have always been customer focused, with our primary objectives being to work smart, have fun, and most importantly, deliver results, all for the betterment of our clients. And next slide. As Crestwood grows in this competitive landscape, our offerings have improved with the following technology stacks. Business Central, of course, as a full cloud-based ERP via the Azure platform, Microsoft Copilot for blazing fast AI assistance for daily tasks, and Acumatica as another best-in-class cloud-based ERP for construction and manufacturing, amongst others, as you can see here, while we continue to grow as an organization. Last slide. With the solid background of Crestwood and what we can do for you, I'm so happy to introduce John Harrington at Avalara here. John?
Hey, thank you, Nick, and thank you for joining. Good afternoon, good morning to everyone in attendance. And I'm excited to talk to you today about some changes that have occurred late last year and early 2025. I do want to kind of share that we are here to talk about tax, but Avalara cannot really provide legal tax advice. We're going to answer any questions that you might have to the best of our knowledge, but this is really more a discussion versus true legal tax advice that we're going to go through. I do want to kind of introduce myself. I've been with Avalara now just short of 2 years, but I've done sales and use tax now for over 25 years. So I really enjoy the topic of sales and use tax, really enjoy talking to people about automating their sales and use tax compliance process. And I'm based actually in the Jacksonville, Florida area. So I know it's probably cold where most of you are located, but I'm glad to report it's not too cold here in Florida today. So with that, just a couple of items that we're going to talk about. We're going to go through a few changes in economic nexus for a couple of states. I want to share with you some items that were on the 2024 ballot last year that have changed some tax laws and tax rates. I also want to talk a little bit about the term retail delivery fees. That's becoming more and more popular across many states. We're going to talk a little bit about the taxation of digital goods and streaming services, and then also tax credits for e-vehicles, and then e-invoicing as that continues to spread across the globe. And then towards the end, we'll have plenty of time for Q&A at the end of our session here. So really simplifying economic nexus thresholds. You know, economic nexus is truly always changing. It's still evolving. Every year it changes. I've highlighted here 4 states that have had some recent changes. The state of Indiana, their State Bill 228 removed their 200 transaction threshold. They actually removed it retroactive back to January the 1st, 2024. In Wyoming, House Bill 197 actually removed their 200 transaction threshold effective July the 1st, 2024. And then in Alaska, many folks think Alaska does not have a sales tax. They don't have a sales tax on the state level, but they do have sales tax at the local level. And they dropped their 200 transaction threshold as well. Their threshold was dropped effective this year, January 1, 2025. In New Jersey, they are seeking to remove their 200 transaction threshold. That's still pending. That's not officially been passed yet into law, but they're working on that. And then I want to just share this next slide with you. This is a picture of economic nexus thresholds by state as of January the 1st, 2025. And you'll notice that the states of California, Texas, and New York have a $500,000 threshold. And then next would be Mississippi and Alabama. And those two states, they have a $250,000 threshold. And then the states that are highlighted in the darker orange color, those states have a $100,000 threshold as well as and/or a 200 transaction threshold. And then the states highlighted like in a lighter orange, they only have a $100,000 threshold. And then the states that are in white, they have no economic nexus law / economic threshold. A couple of states I'd like to point are listed here. Connecticut's threshold is a combination of 100,000 and 200 transactions versus or. So in Connecticut, it's 100,000 in revenue and 200 retail transactions. In New York, their threshold is 500,000 and 100 transactions. And really the big takeaway is, I shared this in the last slide, the concept of what defines economic nexus is constantly changing. Many states recently are dropping the transaction threshold, but this is something that we all need to keep an eye on because states are changing this really from year to year as to what establishes economic nexus within their state. Next, I'd like to share a couple of things about some items that were on 2024 ballots last year. And the first one is in North Dakota. Voters in North Dakota rejected a property tax bill that would have banned property tax based on assessed values. In the state of South Dakota, the residents there voted against a measure that would have repealed grocery taxes. And Oregon denied a measure that would have imposed a corporate minimum tax on gross sales. And in Nashville, voters approved raising Davidson County sales tax to 9.75 so that they could fund transit. In the state of Louisiana, House Bill 10 raised the sales and use tax rate from 4.45% to 5% beginning January 1, 2025. House Bill 10 also repealed a planned sales tax drop that was scheduled for July 2025. Instead, the sales tax rate will decrease to 4.75% starting January the 1st, 2030. And another bill in the state of Louisiana, House Bill 8, extends the sales and use tax, or extends it, to include digital products. So I don't know who is familiar with the term retail delivery fees, but this is becoming a topic that more and more states are beginning to include in their fee structure and their tax structure. The state of Colorado and Minnesota are two states that now have a retail delivery fee. In Colorado, retail delivery fees apply to all deliveries in the state that contain at least one item of tangible personal property. The fee increased to 29 cents as of July the 1st, 2024. And qualifying new businesses and businesses with less than 500,000 in sales during the previous year are exempt. And worth noting, marketplaces are required to collect and remit fees on behalf of their sellers. In Minnesota imposed a 50-cent fee on retail deliveries of orders totaling 100 or more. This too is effective July the 1st, 2024. And the fee applies to the delivery of clothing, even though clothing is not taxable in Minnesota. And retailers with less than 1 million in Minnesota retail sales and marketplaces with less than 100,000 in Minnesota retail sales will be exempt from the fee. Initially, the retail delivery fees were aimed to increase for companies like Amazon deliveries, Uber Eats, and DoorDash. But as this unfolds, it's really starting to impact more and more businesses. It's not levied on commercial carriers like FedEx or UPS, but more last minute specialty delivery. And initially, states kind of placed the argument that they wanted to create this retail delivery fee to combat against the decline in gas taxes because of more and more electronic cars. So this is something to watch. It's going to expand. Some argue it could result in double taxation because of fuel excise taxes. The compliance burden for this is really on the taxpayer. For example, in Colorado, the taxpayer has to clearly show the delivery fee on the invoice. And that's just an added requirement that you have to build into your existing invoice process and invoice system. A couple of states I would like to share, you see them on the screen here. Maryland, Nebraska, Nevada, New York, Ohio, Washington. These are at least 6 additional states that are starting to really seriously consider also adding retail delivery fees to their tax structure. In Washington, their Joint Transportation Committee has recently published a report that talks about the effect of a 30-cent fee if they were to implement that within the state. So retail delivery fees, something to just keep an ear out for, keep an eye on, because it is starting to become more and more relevant in more and more states. The next area is taxation on digital goods and streaming. This is also becoming a larger topic for many states. Cities in California right now are proposing to expand their utility user tax to include streaming services. The city of Santa Barbara and Disney right now are in a court battle over $642,000 amount that was paid in utility user taxes. Massachusetts and New York both introduced bills in 2024 to tax streaming services. And other states, we mentioned earlier, in Louisiana, House Bill 8, it extended the state sales and use tax rate to select digital products, including digital audio and audiovisual works, digital codes, digital books, and digital applications, as well as games. In Georgia, they started to tax certain digital products in January 1, 2024. December the 19th, they did have a remote regulation hearing to hear comments from taxpayers about the idea of taxing digital products. So more to come on that. Michigan added guidance on the taxability of NFTs back in August. And really, if the NFT represents ownership in tangible personal property, then it's deemed taxable. And then Vermont did enact a new bill to include pre-written computer software, to include SaaS, and its definition of taxable tangible personal property. Again, a lot of changes take place July 1. You see that here in Vermont as well. So this will be an ongoing item added to the taxability in many, many states. Next is just the idea of electronic vehicle tax credits, unfortunately, is going away. Many states will be ending these special tax credits. I wanted to just share with you, in Washington, D.C., there is a proposal that would eliminate the preferred tax rate. And if this is approved, then the tax would go back to the normal 6% standard rate within Washington, D.C. The state of Pennsylvania has eliminated their alternative fuel tax on electric vehicles and replaced it with an electric vehicle road user charge. And New Jersey will gradually end its sales and use tax exemption for zero emissions vehicles. So again, many e-vehicle tax credits are either being lowered or completely going away. And then lastly, on the list of changes is just the whole idea of e-invoicing. This is starting to spread really throughout the world. And I wanted to share with the group just a couple of countries. There are over 80 countries now that have e-invoicing mandates. Britain is in the process of providing some information and guidance on how to be compliant with their e-invoicing requirements. Germany, as of January the 1st, 2025, businesses must be able to receive e-invoices in their process. In the country of Poland, they actually have a business-to-business e-invoicing requirement, but they are going to postpone that. They wanted to start it in July of 2024, but that has been postponed now to February the 1st, 2026. France, too, has also postponed their e-invoicing mandate. Theirs has now been extended to September of 2026. And then beginning this year in Saudi Arabia, if you have 7 million or greater in annual income, you are required to report your e-invoicing activity. And then lastly, in Estonia, the businesses will be required to file for their business-to-business invoices in 2027. Again, they delayed theirs from this year to 2027. So really designed, that whole process, we designed this to be very high level. I didn't want to go into great detail. I will share with you, though, as a follow-up to today's presentation, there is a 138-page document that is our 2025 tax law changes that Courtney can provide to you if you'd like to see greater detail. I'm going to pause. We can open up the system for questions if anyone has a question. And if no questions, I don't really have access to the chat. So Nick, do you see any questions in the chat?
No, I don't. So we have the Q&A section and the chat section. I'll give folks a few extra seconds, but I don't see any yet.
Sure, and I'll just kind of reiterate too. I know that in an environment like this, where there's a lot of folks on the call, if you're not comfortable with asking a question in front of the group, or if you have a very specific question for your business, I'm really happy to take a question, after the call via email. Happy to be of service and answer a question if you have it, if you'd like to ask more privately versus in the big public chat like this venue. We're always interested and available if you want to talk about automating your compliance process. And I just kind of want to reiterate too that we do have a very nice document. And if you let Chloe know if you'd like a copy, we're happy to give you a copy of this 2025 tax changes. It's just a really great booklet that has a lot of good information. And that's really it. Again, we designed this to be more high level and summary format versus going into great detail. But more than happy to take any questions either now or if you'd like to email questions, we're happy to assist.
Thank you
Yeah,
so
I
much,
think it
John. I
was a great
appreciate it.
webinar. Thank you, John. Thank you, Nick. I will be sending out a request form on the emails to you guys, everyone that attended, to request that document. But I think we are good to go. Thank you, everyone, for joining. Thank you both for presenting, and I hope everyone has a great rest of their day.
Take care.
Yeah, have a good day and thank you again. Bye now.
Bye.